Hey guys, Nick Kellar at West Premier Realty, joined again with the famous Matt Nader with First Home Mortgage. We wanted to obviously a lot going on. The elephant in the room being the COVID situation and how that's impacting our industry. A lot of people have asked questions on what we're seeing. Gone through that with a video, but also thought it was pertinent to bring you in as the expert in the mortgage world and just talk about what we've seen COVID, how it's impacted the mortgage industry, what it's been since, I guess, really early on, and then what we're seeing moving forward. So
Sure.
Jump right into it. It was scary times in March, wasn't it?
Very, very, very scary. Very.
I don't think I've ever seen you concerned before.
And I was concerned, and I think there was probably, starting early March, it was almost daily that there was some sort of new information coming out or news coming out or banks pulling some product back, small correspondent banks going under or the risk of going under, guidelines drastically changing, right? Like overnight from some government loans from a sub 600 credit score to we are currently at a 640 for FHA and VA loans. There's some companies that are upwards of 680. And I mean, we're talking overnight.
So a lot of people who would qualify no longer qualify. Correct.
Right. I mean, I had a few clients out that were, sub 640 credit scores that, quite frankly, the pricing was still great. The risk modules weren't that bad. It just, once this started, boom, just guidelines quickly started to change, and it's just risk. It's contraction of some product that is just riskier to the bank is what quickly got pulled back. So I think the biggest category subset of product that got hit was lower credit scores and jumbo loans. Mm-hmm. So what means non-conforming loans. Non-conforming loans mean they can't be sold on the secondary market. There was product that was 10% down with non-conforming. Mm-hmm. Now it's 20% down, 700 credit scores, just kind of back like to that late 2008, early 2009.
Right. But all that happened in a short amount of time too. So it was pretty volatile, turbulent times. And then, I mean, most people, when they want to know the impact of something in our world, one of their first questions is how it impacted rates. We saw rates jump daily, and what's happened since then?
So rates have really settled down. March was probably, this is going on my 15th year. March was the craziest 30-day timeline or 31-day timeline of where rates were to where they went to where they came back to. And it was every day. Typically we get rate sheets are posted once a day. In March, we were like 4 or 5 or 6 or 7 rate sheets a day. So it was, when I was talking to a client, I would tell them what their interest rate was. And I would say to them, if I don't lock this in right now, this is probably going to change in the next 20 minutes, or it's subject to change in the next 20 minutes. Wow. And it just, it's kind of like everybody in every sector and every mindset that went on in the last 60 days of those first 30 days, everyone was, what are we going to do? Just really freaked out. And now everyone seems to, personally, professionally, whatever it may be, it seems like everyone's just kind of, taking a deep breath. It's calm down a little bit.
It goes back to a lot of things, right? It's never as good as it seems. It's never as bad or as it's going to seem. And I think that's where we were in March, is we thought the world was going to collapse. And look, I mean, there's a lot of hardships being created by that. I'm not dismissing that whatsoever, but I think it took people, by and large, collectively a few weeks to just kind of say, you know what? For the most part, it's okay. It's not the end of the world. We can still move forward with some things. We just got to take certain precautions, and it's understandable. I mean, it was a scary thing. But what's happened since then, and what do we think going forward with things, with interest rates, the mortgage market, everything?
Sure. So again, it's definitely calmed down a little bit. Meaning, we're not getting daily memos of this product is changing. I think we've kind of settled in a bit. In regards to guidelines and pathways that we know exactly what we can finance, what that's going to look like. So that's definitely a huge benefit factor of like a deep breath. Rate wise, our rates are really, really good right now. I mean, we're back to 50-year historic lows. Yeah. Projections on rates, we might have a little bit of room to improve. And I say that because just where the technicals, which mean, which actually yield our interest rates, where they're at and where they're trading, we could still have a little bit more room.
You mean go down, right? Improve by going down.
Improve by a little bit, yeah. But we're looking right now at very, sub 3.5, sub 3.25, 30-year fixed rate mortgages, which, when I talk to my old man about a 30-year fixed rate at 3%, he doesn't understand it, because when they were buying houses in the late 80s, they were 14%. So rates are great. Rates are really, really good now. I don't foresee that drastically changing. May we get a little bit better? Yeah. Do I foresee us getting worse? Do I see us going back to a 4% note rate? I really don't think that's going to happen anytime soon. I don't think that this pandemic that we've gone through and what it's done to our economy is going to allow for us moving upwards of 1% or 100 basis points in the interest rate. I kind of think we're going to settle right around that 3% for some time. And I still think that our residential real estate world is what kind of jumpstarts our economy again.
Yeah, I totally agree with you. And it's a big part of the GDP, and there's a lot of collateral spurring of the market when it comes to housing. People going to home improvement stores and decorating and all that stuff. So that's very true. So big thing is a lot of volatility early on. Things stabilized, and for the foreseeable future, I think we're going to stay stable and pretty much at historic rates. So if you are considering getting into the market, or maybe you're buying new construction where you have a length of time before you actually have to lock in, it feels like you're going to probably be pretty safe in getting a pretty good interest rate. So if you have any questions with how this relates to you or anybody you know, please let us know. First and foremost, we hope you and your families are staying safe, and we appreciate the support. And if you need anything at all, please don't hesitate to reach out to Matt or myself or anyone here at Atlas. And appreciate it. We'll see you next time. Thanks.